Okay, so today we're going to dive right into Lululemon,
All right.
looking at how they did in Q4 and the full fiscal year 2024,
Okay.
which ended February 2nd, 2025.
Sounds good.
We've got the company's press release with all the earnings numbers right here.
Yep.
And, we're going to try to figure out, like, what's important
Yeah.
so that our listeners can get, like, the big picture without, having to, like, read through all this.
Right.
So basically, like, we're going to try to figure out how did Lululemon do?
Yeah.
What's making them grow?
Mm-hmm.
And, what might happen in the future based on, what they're saying here.
Yeah, I think that's a great plan, going right to the source, like this, the company's own words.
Right.
I think that's going to give us like the clearest picture of how they see their own performance.
For sure.
And yeah, by looking at the numbers and how things are changing, we can really get a good idea of where they are and like where they're headed.
Totally. Okay, so let's start with fiscal year 2024, like the whole year,
Okay.
and compare that to 2023. So revenue growth, is like the first thing you look at.
Yeah, for sure.
See how a company is doing. Overall, their net revenue hit $10.6 billion,
Wow.
which is a 10% increase. So that's pretty solid.
Yeah, that's really good.
But it gets even more interesting when you look at it on a constant dollar basis.
Okay.
So that means like taking out the effects of, currency changes and stuff.
Right.
And then the growth is actually 11%.
Oh, wow. So even better.
Yeah, and we also got to remember that 2024 had an extra week.
Oh, right. Yeah. Fiscal 2024 was a 53-week year.
Exactly, versus like the normal 52 weeks. So if you take out the sales from that extra week,
Yeah.
net revenue still grew by 8%.
Huh.
So that gives us a better comparison year over year.
Right. That makes sense.
And shows that their core business is still performing really well.
Yeah, for sure.
Now, that growth wasn't the same everywhere.
Okay.
In the Americas, net revenue went up 4%,
Okay.
but internationally it jumped by 34%.
Wow. 34.
And if you adjust for currency, it's 36%.
That's huge.
So that international growth seems like a really big deal.
It does. Yeah. It makes you wonder what's driving that.
Yeah. Do they say anything in the report about like which specific markets are doing so well?
Well, they do mention China mainland, like specifically as being a big factor in that growth.
Oh, really?
Yeah. It seems like they're really connecting with customers there.
Interesting. So like their strategies in China are working out.
Yeah. It seems like it.
Huh. And that makes you think like, how is their approach in China different from what they do in the Americas?
Right. Yeah. That's a good question.
Okay, so let's move on to comparable sales.
All right.
Again, we're going to look at the numbers without that 53rd week.
Gotcha.
So overall, comparable sales went up by 4%.
Okay.
But just like with net revenue, the different regions had very different results.
Okay.
In the Americas, comparable sales actually went down by 1%.
Oh, wow.
But internationally, they shot up by 22%.
Wow. Again with the international.
Yeah, and 24% on a constant dollar basis.
So it really seems like international demand is driving their growth in comparable sales.
Exactly. It's like the main engine right now.
Yeah, it really emphasizes how important their international business is becoming.
Totally.
Like even though the Americas are still a big chunk of their sales, the growth is definitely shifting towards these new markets.
Yeah, and that raises the question, is this like a temporary thing or is this like a fundamental shift in how they're growing?
Yeah, good question.
All right, let's talk about profitability
Okay.
because that's like, how healthy a company is.
Right. Profitability is key.
So for the whole year, their gross profit increased by 12%
Okay.
to $6.3 billion.
Nice.
And their gross margin got better too. It went up to 59.2%, which is a 90 basis point increase.
So they're getting more efficient.
Yeah, exactly. Like they're not just selling more,
Right.
but they're also making more money on each sale.
That's great.
Yeah, and that better gross profit like flowed down to their operating income,
Okay.
which increased by 17% to $2.5 billion.
Wow.
Their operating margin also went up to 23.7%, a 150 basis point improvement.
That's a big jump.
Yeah, and their diluted earnings per share reached $14.64, up from $12.20 in the previous year.
So they're crushing it in terms of profitability.
Yeah, across the board, it looks really good.
It shows that they're not just growing revenue, but they're also managing their expenses well.
Right.
And being able to turn those sales into profit, that's like a sign of a really strong brand.
Absolutely. Okay, so they also kept expanding their stores.
Okay.
They added 56 new company-operated stores.
Wow.
And 14 of those were from like an acquisition in Mexico.
Oh, interesting.
bringing their total store count to 767.
So they're still seeing value in having physical stores.
Yeah, even with, online shopping being so big.
Right. It makes you wonder, like, how does that fit into their strategy, especially internationally?
Yeah, especially with that acquisition in Mexico.
Yeah, exactly. Like, are they planning to have more stores in the Americas, or is it more about international expansion?
Good question.
It seems like having physical stores could be really important for building their brand in those new markets.
Hmm.
Giving people a real life experience with the brand.
Right.
And it can also help support their online sales too.
Yeah, it's all about creating that, seamless experience across all channels.
Right. Omni-channel. That's the word.
Okay, so another interesting thing they did was buy back some of their own shares.
Oh, okay.
They repurchased 5.1 million shares for $1.6 billion.
Wow. That's a lot of money.
Yeah, and that's like giving money back to the shareholders.
Right. So what does that usually mean when a company does that?
Well, it often means they think their stock is undervalued.
Okay.
Like it's a good deal to buy back their own shares.
Interesting.
And when they do that, it reduces the number of shares out there,
Right.
which can make each share more valuable.
I see.
It basically shows that the management believes in the company and thinks it's going to do well in the future.
That makes sense.
All right, now let's peek at their balance sheet at the end of the year. They had $2 billion in cash
Yeah.
and cash equivalents.
So they're sitting on a nice pile of cash.
Yeah, but their inventory also went up by 9% to $1.4 billion.
Mm. A 9% increase.
Yeah, and that always makes you wonder, is it because they're expecting a lot of demand?
Right. Stocking up.
Or could it be something else, like maybe sales were slower than they thought?
Yeah. Could be.
We'll have to see how their inventory changes in the future to really understand what's going on.
Definitely keep an eye on that.
Okay, so now let's focus on Q4 of fiscal 2024.
All right.
Specifically comparing it to the same period in 2023.
Gotcha.
Their net revenue for the quarter grew by 13% to $3.6 billion.
Okay.
Or 14% if we adjust for currency.
Right.
And just like with the full year numbers, if you take out that extra week from 2024,
Right.
growth was still at a healthy 8%.
So it seems like they're maintaining that solid growth.
Yeah, exactly. It's consistent with what we saw for the whole year.
Yeah. And I think that regional difference we were talking about earlier might even be getting bigger.
You think so?
Yeah. Let's look at the numbers.
Okay.
So in Q4, America's net revenue was up 7%,
Okay.
or 8% on a constant dollar basis.
Hmm?
But internationally, it jumped by 38%,
Wow.
and 40% if you take out currency fluctuations.
So internationally, they're just killing it.
Yeah, it seems like their momentum is really building in those markets.
And Q4 includes the holiday season, right?
Yeah.
Which is like a super important time for retail.
Yeah, for sure.
So these numbers tell us that their investments and strategies internationally are really paying off.
Seems like they've found a formula that works.
Yeah. Now, comparable sales for Q4,
Okay.
again, taking out that 53rd week,
Right.
they increased by 3% overall or 4% on a constant dollar basis.
Okay.
But here's where it gets really interesting.
Well.
In the Americas, comparable sales were flat
Flat.
compared to Q4 of 2023.
Huh.
Yeah. So that's a big difference from the full year where they only decreased by 1%.
Right. That's a pretty noticeable change.
Yeah, and it makes you wonder what's going on in their more established market.
Yeah. Is there something specific happening in the Americas that's causing this?
Could be like maybe the market is getting saturated.
Right. Like they've already reached most of the people who would be interested in their products.
Yeah. Or maybe competition is getting tougher.
Yeah, there are a lot of other athletic apparel brands out there.
Right.
Or maybe it's something about how consumers are changing, like, their preferences or how much they're spending.
Yeah, there are a lot of factors that could be at play.
Do they say anything in the press release about what they're going to do about this?
Not really. They don't get
Yeah.
into specifics about how they plan to boost growth in the Americas.
Okay,
But it's definitely something they're going to have to figure out.
for sure.
Meanwhile, internationally comparable sales kept going strong,
Of course.
increasing by 20% or 22% on a constant dollar basis.
Wow, so it's like a tale of two markets.
Yeah. Totally different stories in the Americas versus the rest of the world.
It highlights the two sides of their business right now.
Right.
On one hand, they're expanding rapidly in these new markets. But on the other hand, their more mature markets are seeing some challenges.
Yeah. All right, let's see how they did on profitability in Q4.
Okay.
So gross profit increased by 15% to $2.2 billion.
Okay.
And their gross margin hit a really impressive 60.4%, up 100 basis points.
Nice.
Their income from operations went up by 14% to $1 billion,
Wow.
with an operating margin of 28.9%, a 40 basis point improvement.
So they're still very profitable.
Yeah, even with those flat sales in the Americas.
Right. That's interesting.
Yeah, it seems like they're really good at managing their costs.
Yeah.
And maybe they have enough pricing power to keep their margins strong even if sales slow down a bit.
Yeah, it shows the power of the Lululemon brand.
Definitely. They also kept buying back their own shares in Q4,
Okay.
repurchasing zero point 0.9 million shares for $332.2 million.
So they're sticking with that strategy.
Yeah, and they opened 18 new stores in the quarter, bringing their total to 767.
So they're still investing in both sword expansion and share buybacks.
Exactly. It's like a
Yeah.
two-pronged approach.
Yeah, a balance between growth and giving back to shareholders.
Okay, so now let's dig a little deeper into the performance of different regions and categories.
Right.
We've already talked about how well they're doing internationally, especially in China.
Right. It's really impressive.
Yeah, it feels like their international strategy is a huge success story.
Absolutely. And those growth rates they're seeing internationally, especially in China,
Yeah.
it's not just like a small increase,
Right.
It's a major expansion of their market and how many people know and like their brand.
Totally.
That kind of growth can really change their future in a big way.
Yeah, and then you have the Americas where comparable sales were flat in Q4.
Right. The opposite story.
Yeah, it makes you wonder what they could do to get things moving again in their home market.
Yeah. What kind of changes could they make to their products or their marketing,
Well,
to try to get people excited about Lululemon again?
exactly.
I wonder if they've hinted at any new directions they might take.
Yeah, it'll be interesting to see what they do. Okay, so let's break down the revenue growth by product category for Q4 and the full year.
Okay.
And remember, we're going to exclude that 53rd week to keep the comparison clean.
Gotcha.
So women's products grew by 6% in Q4 and 7% for the whole year.
Okay.
Men's products did even better, with 12% growth in both Q4 and the full year.
Oh, wow. So men's is really outperforming.
Yeah, it is. And then other categories like accessories and footwear
Okay.
grew by 9% in Q4 and 8% for the full year.
So that growth in men's products, that's really interesting.
Yeah, it seems like their efforts to appeal to more men are working.
Right. They're not just a women's brand anymore.
Yeah, and that's a big opportunity for them to keep growing.
For sure.
Okay, so now let's look ahead to what they expect for fiscal year 2025.
There, the future.
They're predicting net revenue between $11.15 billion and $11.3 billion,
Yeah, okay.
which would be a growth of 5% to 7%.
All right.
And remember, 2025 will be a normal 52-week year.
Right back to the regular schedule.
So compared to 2024's underlying growth of 8%,
Right, taking out that extra week.
they're expecting to keep growing at about the same rate.
So they're optimistic about the coming year.
Yeah, even with those challenges in the Americas.
Right.
They also gave guidance for diluted EPS, expecting it to be between $14.95 and $15.15 for the year.
Okay.
And they said this assumes a tax rate of around 30%,
Mm-hmm.
and it doesn't include any potential future share buybacks.
Okay.
So if they keep buying back shares, that EPS number could actually be higher.
Right. That makes sense.
So basically, they're giving investors a clear idea of what they expect for their profit.
Yeah, transparency is good.
And they also talked about their Power of 3x2 growth plan.
Right. I've heard of that.
Yeah, so their goal is to double their business from 2021 to $12.5 billion by 2026.
Wow, that's ambitious.
Yeah, and they're going to focus on three things:
Okay, what are they?
product innovation,
Mm-hmm.
guest experience,
Okay.
and market expansion.
So those are like the pillars of their strategy.
Exactly. And if you think about the strong international growth we've seen, it aligns perfectly with that market expansion part of their plan.
Totally.
And the growth in the men's category probably reflects their focus on product innovation.
Right. Trying new things.
And their consistent profitability suggests they're managing the guest experience well.
Yeah, making sure people are happy and keep coming back.
Exactly. So it seems like they're really putting this Power of 3x2 plan
Yep.
into action.
Yeah, it's not just talk, it's actually happening.
All right, before we wrap up, let's just touch on a few important things again.
Yeah, okay.
We talk about the constant dollar basis, which helps us understand the real growth without the effects of currency changes.
Right. Getting rid of that noise.
Why is that so important for a global company like Lululemon?
Well, because they operate in so many different countries,
Right.
those exchange rates can really mess with their numbers.
Yeah, make things look better or worse than they actually are.
Exactly. So by showing the numbers on a constant dollar basis, they're giving us a clearer picture.
Right, like what's really happening with their business.
Exactly.
We also talked about that extra week in fiscal 2024
Right, the 53rd week.
and how they adjusted the numbers to make the comparisons fair.
Yeah, yeah. Very helpful.
It seems like they're trying to be transparent.
Yeah, being upfront about the quirks in their reporting.
Yeah, so that investors can understand what's going on.
Definitely.
And finally, we mentioned those adjusted non-GAAP measures they used in 2023.
Right, for Lululemon Studio.
Yeah, and they had to do that to give a clear picture of their core business.
Yeah, because those adjustments were related to like a specific change they made.
Right.
So the fact that they didn't have to make any adjustments in 2024
Mhm.
suggests that things are more stable now.
Yeah, like their core business is running smoothly.
Less noise in the numbers.
Okay, so to sum up our deep dive into Lululemon,
Right.
fiscal year 2024 was a good year for them.
Yeah.
They had strong revenue and profit growth overall,
Mm-hmm.
with international markets really leading the charge,
For sure.
which helped to offset the slower growth in the Americas.
Right. Especially in Q4.
Exactly.
Yeah.
Now, looking ahead to fiscal 2025, they're expecting to keep growing at a solid pace,
Yeah.
driven by new products and expanding into new markets.
Yeah, seems like they're on the right track.
They're calling it their Power of 3x2 plan.
Right. Ambitious, but it seems to be working.
So here's something for you all to think about.
Okay.
We've seen how differently Lululemon is performing in different regions and with different products.
Right.
So what do you think their biggest priority should be in the next year as they try to reach those ambitious goals they've set for themselves?
Yeah, good question.
How should they balance their investments and where should they focus their attention?
Right.
Should they pour more resources into those high growth areas,
Yeah.
or should they try to fix things in those mature markets where they're struggling?
Right. That's a tough choice.
Yeah. And what kind of new and innovative things will they have to do
Hmm.
to succeed in the ever-changing world of retail and athletic apparel? Thanks for joining us on this deep dive.
It's been a pleasure.
We'll catch you next time.
See ya.